Hello everyone, welcome back. I got some really good ones for you today on this Wednesday, March 20th, 2024. A lot's been going on with the markets, especially around this conclusion of the FOMC meeting, Powell's press conference, the ensuing Q&A. So that's kind of what's running the headlines right now for the markets, the Federal Reserve's interest rate policy decision. Everybody's kind of out giving their hot take, and this is mine. So welcome back. Glad you made it. Glad we can hang out together. And let's dive right into these markets and the Fed, shall we? So right at about 2 p.m. today, when Powell gave his press conference, right at 2 p.m., maybe like 1:59, I saw on the minute charts, the dollar crater and the markets just took off like a scolded cat. What sparked that rally, I believe, was Chair Powell saying, and I quote, "We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year." That's a direct quote, you guys, and that really sent the market skyrocketing. Dollar cratering, kind of as we discussed. Volatility cratering. This is the Fed confirming for the markets that the next thing the Fed does is interest rate cuts, and like a lot of them, guys, an entire easing cycle is about to begin, and this has got the markets so giddy. You know, the Fed promising interest rate cuts in the future is almost better than just cutting them, because we're in a situation now where the market knows interest rate cuts are coming, been pricing those in, and then Powell comes out kind of reiterating to markets what they're suspecting, as well as giving a little bit clearer of an idea what rates are going to be doing over the next few years, and slowing the roll off of his balance sheet. So my gosh, like basically the market came out today kind of unsure what Powell was going to do. You know, maybe Powell's going to put these interest rate cuts off to the fall. Maybe we still have hikes and we don't know about it yet because, you know, Powell's concerned about inflation. So, you know, who knows? We could get something other than cuts, you guys. Like, that's kind of what was sending the markets into a little bit of a sell-off in this last 2 to 3 weeks or so, is kind of the market going, hold your horses. Are we really cutting rates in June or May? Like, I'm not really even sure that I believe it. You know, the market's kind of been pricing in an easing cycle since about October, November of last year. So that's when the real insiders, the real elites, not lowly retailers like me, although I suspected it, but the real elites started to position themselves for interest rate cuts as far back as October, November of last year. And that's really when, you know, markets have been moving up ever since that time. So for the last 6 months, that's been everybody slowly getting on board with the fact that we're not doing interest rate hikes anymore. We're not gonna fight this inflation fight any longer. We're gonna let inflation run a little hot, and we're gonna cut rates, and we're gonna send these markets to the freaking moon. And that's why the S&P 500 has been all the time, you know, flirting with and reaching new all-time record highs, and why Bitcoin's been hitting new all-time record highs. It's the market kind of smelling those rate cuts coming. And then today's Fed meeting confirmed interest rate cuts are coming. We have Powell talking about having the Fed funds rate, which is at 5.5% today, down to 4.6% by the end of this year, 3.9% by the end of 2025, 3.1% at the end of 2026. Guys, this is Fed Chair Powell coming out and just loading interest rate cuts into the chamber. It's hyper bullish for markets and risk, and it's really bad for inflation and the dollar. So, you know, if you're in 1% cash, 99% stocks, precious metals, Bitcoin, energy stocks, tech stocks, bonds, you know, if that's your allocation, like cash is trash to you, you're having a wonderful day today because you have interest rate cuts coming. And on the flip side of that, if you're just saving a lot of dollars, you know, you have a very full savings account, but no assets or investments to speak of, well, all the purchasing power is getting sucked out of that savings or checking account, that cash position, that savings, and put into the markets, you know, put into the rich people stuff. So really great day for the elites. I'm sure the elites are going to buy Powell a stiff drink tonight and pat him on the back and say, hey man, thanks for getting on with these interest rate cuts, even though you don't have inflation down to your 2% target. Really like it. I really like that you've surrendered your fight against inflation and are ready to incinerate the dollar on the back of incinerating the dollar all through COVID. So Great day for risk asset prices. Great day for house tag prices. Great day for gold coin prices. Great day for Bitcoins and, pencil erasers in your left shoe. Like, all that's going up in value as the dollar craters. We saw 1 p.m. the dollar cratering. Crazy, you guys. So we have a Fed that is telling you that the next thing the Fed embarks on will be interest rate cuts. We have a Fed telling you that interest rate hikes are over. We have a Fed telling you that inflation is still running a little bit hot. We have a Fed telling you that there are going to be several interest rate cuts coming over the next few years and that we're starting an easing cycle. And we have a Fed telling you this is just adding insult to injury, you guys, and really hooking the elites up. Powell also mentioned in today's press conference he wants to slow the pace of his balance sheet runoff fairly soon. So, guys, that's crazy. To put it another way, the Fed's holding a lot of toxic assets on their balance sheet. They got there from, taking these toxic assets off of banks, printing money to buy bonds to drive bond yields down. They really fill up their balance sheet in order to backstop the S&P 500 and the banks and the corporatists and the private sector. And as the Fed rolls off their toxic assets, that's kind of dumping them onto the market and giving those toxic assets back to the market. And generally, the market doesn't like that. Like, the market doesn't like the Fed selling its, $6 trillion balance sheet, somewhere like that. You can Google Fed balance sheet trends right now. Check it out on the St. Louis Fed website. I should have done that before this video. It's probably sitting at 6 or 7 trillion right now. When the Fed pumps that 7 trillion on their balance sheet to 10, that's really weakening the dollar and backstopping markets. Markets love that. And on the flip side of that, if the Fed were to roll their balance sheet off from 7 trillion to call it 0, the market would really hate that because the market's getting a bunch of toxic assets back. Well, the Fed is now slowing their runoff of their balance sheet. So they're slowing the pace at which they dump toxic assets back into the market. So, guys, there's a lot of reasons to be really bullish given this FOMC meeting. Bullish risk, bullish stocks, bullish crypto, precious metals, energy. Those things really house tag prices. Those things really look to benefit as the dollar weakens, rates come down, yields come down, inflation remains really bad. So that's kind of the dark side of today's FOMC meeting, is that if you're a wage earner or you're a young person and your life is more or less denominated in dollars, well, you're just getting incinerated because they're sucking all the value out of the currency, out of the dollar, and putting it in rich people stuff, driving it higher. So you see how it's a really good day for the elites, you guys, and a really bad day for fixed income savers, wage earners. They're just getting incinerated. So that's kind of your update. It'll take 3 to 4 days, I would say, to digest the federal interest rate decision. I call it the Fed burrito. You kind of got to take a few days to digest it because it kind of goes down like, Fed days always get the market kind of whoa, especially the last few years, given prior FOMC meetings, the Fed's always been coming out reiterating that inflation's too high. They need to get inflation down by raising interest rate. That's bad for market. They want to crush demands. That's bad for markets. To try to bring equilibrium back to the marketplace. The market didn't like hearing that. It's really good for the dollar, really good for bond yields, and really bad for people holding risk assets. But starting in October, November last year, they kind of pivoted in their rhetoric. I'd say by about January, February, lowly retail traders like me fully caught on that the Fed was done hiking interest rates. And now we're in a situation where the Fed is reiterating, we are done hiking interest rates. We are going to be cutting them. They don't want to say this is going to be rocket fuel for the stock market and horrible for the dollar, but read between the lines, you guys, especially given that inflation is still not down to their 2% target. So before the Fed ever got inflation down to their 2% target, they surrendered, they threw up the white flag, we give up on our inflation fight, and then they have now moved markets into a easing posture. And the market loves this. Man, this is like the Goldilocks zone for risk asset price appreciation because it's almost better than a rate cut. Like today, if the Fed had cut rates, markets would have been like, I don't know, are you really sure about that? That's a little bit too soon, maybe. That you're really going to incinerate the dollar and guarantee inflation remains high. So, a rate cut today wouldn't have been good. A rate hike wouldn't have been good because it would have caught all the traders pricing in rate cuts flat-footed. So the Fed threaded the needle perfectly. They delivered on market expectations and reiterated that the market's going to win and inflation is going to remain high. So wild day for markets, you guys. Great time to be fully loaded and 1% cash, like fully loaded in the market and 1% cash, like you're clicking your heels to the bank right now. And on the flip side of that, if you've been saving cash, waiting for market corrections, being a bit of a bear when it comes to markets, well, you're skittering off into the woods now. You're scared. You're freaked out. The bears are scattering, and the bulls, which were already kind of stampeding around and goring people this year, they look to continue doing just that. So we'll see how the next 3 or 4 trading days go. I would say after that, at that point, the market's pretty well priced in that, where it's at. Guys, this is all about the very forward-looking stock market recalibrating its expectations. Never treat the stock market like a lagging indicator, you guys. The stock market does not read news headlines and then react. The stock market today is trying to price in where it'll be from anywhere from 6 months to 18 months from now. So 6 months to a year and a half out, that's what the stock market's pricing for today. So the stock market is very forward looking. So as the Fed adjusts rate expectations going forward, the market kind of tries to stay out ahead of that and kind of guess where it's supposed to be even further down the road. But the Fed gave the market a lot of warm fuzzy today, you guys, telling the market you're going to get interest rate cuts. We're spotting you. If you fall down, we'll pick you up. We have cuts coming every year until 2026. That is a lot of dollar devaluation that the Fed has chambered for the market. So Fed's just telling you, I know inflation. Basically, guys, this is the most layman way you could put today's press conference. I'll be, Fed Chair Powell. Well, inflation is running a little hotter than we'd like. We'd like to get it down to 2%. It's closer to 2.8%, when in parentheses, he doesn't want to tell you this part, but in parentheses, it's way higher. It's 5 or 6%, but I digress. So inflation is, at 2.8%. We want to get it down to 2, but we're just going to cut interest rates instead and just completely trash the dollar and make inflation worse. That's basically what happened today at today's press conference. And the Fed said, and we're going to cut rates more and more till 2026, and we're going to slow the roll off of our balance sheet. So it's just check every box for reasons why you'd want to get long this market and short the dollar, and that's what we saw right at 1 p.m. Dollar cratered, volatility cratered, market takes off. So that's really all I got for you guys for right now. We'll reconvene as things progress, but nothing's really changed for me. I still like high growth tech. I still like energy. I still like crypto. I still like precious metals, the physical kind, not so much the mining equities or any of that nonsense, but just physical gold and silver stacking for the long term. Bitcoin, Ethereum, Chainlink, Uniswap, Solana, Avalanche, those are some cryptos that are looking pretty hot right now. Pepe, still got my big old bag of Pepe, and I'm taking that one, to Valhalla. So nothing's really changed for me, you guys. We're just going to stay long and strong. We're just going to reconvene as things progress. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. Till next time.